Morning, this is Andrew from Trend Following Mentor. This is a weekend review. I want to invite you, first of all, to read my disclosure that past performance is not necessarily indicative of future performance. And none of these are actually suggestions. So here's the disclosure. I want to start with that first. And secondly, the most important, I think, is then we look at the market. And this week was a pretty tough week. We had this big shakeout day on Thursday and this absolute reversal on Friday, which could be considered very bullish, this shakeout, this snapback. Um, but there's problems on it because there's weak volume on this big day we had up on Friday. And the other really big negative is the age of this bull market. We're pushing almost 7 years, and statistically, as us, as people, we have a longevity. So do bull markets. They don't last forever. The other negative is we have 8 distribution days in the stock market right now. Distribution days when, let's say, typically we're over 6, we have pullbacks as we saw over the summer here, or late summer. But what you have to do is really focus on the stocks on your watch list and see exactly where you're at. And that's what I'm doing in this weekend review. Okay, first of all, you can see we're still bullish on the QQQ on the NASDAQ. These are my rules. I use MetaStock. I want to be above the 200-day moving average. I want moving averages to be above. So we're bullish. And the same thing you'll see also on the S&P 500, even though it's a little bit shakier. And you can actually see this by the colors as well. The other thing I want to point out, which I think is very, very interesting, let me do this on a monthly basis. The market is looking tired. Look right here. You can see that there's a crossover. You can see there was a major crossover here, which was a late crossover. But also here, we're starting to cross over. It could be a sign that this bull market is getting tired. But you take it day by day. Let's jump back to here. Oops. Some of the stocks are on the watch list. And there's an art and a science to this. What I do is I only hold 5 positions. And sometimes you miss things. Like this was on my watch list, Amazon, and it gapped up. And I thought it was an older, tired company, even though, you know what? I'm basically, you could say, wrong. Gapped up, you bought the high of the breakout, would have been bought here. And you'd be in this thing still, looking to try to get a 20% return. And it's still moving nicely. Chipolita, I want to talk about is don't fall in love with your stocks. It's not just the news. This right here, this 50-period exponential moving average is a line of demarcation. When you're below this thing, you could have exited pretty much here would have been a good reason to have exited and avoided all of this if you were still long. So you have to follow rules, and that's exactly what we do. CRM, Salesforce, it's another strong one. It was on my watch list. You can see where I looked at the breakout here back in October. What I try to do is I look not just at technically, I look at the fundamentals. I try to pick companies that I understand, which I'll show you next, that have extremely strong quarterly earnings, annual earnings, and I feel there's something new and innovative about the company. That brings me to Facebook. And you can see I was looking at Facebook on a couple different levels. This is an early entry here. And then the other entry was about here-ish. I'm in this stock. I also bought the gap up here, and so far it's really not really working overly well for me. But I bought Facebook for the rationale that they had bought Instagram and WhatsApp, and they're going to monetize those. So that was my impetus, something unique. There is nothing else like Facebook, and there's something new in Facebook. Southwest Airlines, I'm in this one. And the rationale is I missed Hawaiian Airlines. The thing is, why the airlines? They're making a lot of money now because of the low price of crude. I understand that. And I think it's a run. I think Southwest is a well-run airline. I bought the breakout here. It really wasn't doing anything. I probably bought it here. Then it started falling below the 10-period exponential moving average. And then finally, it started taking off. This is what you want to see. But the thing is, I immediately have stops on any of my trades at minus 7%, just in case they don't work. And then I scale in. I'll buy one at the breakout by 50% of my position. Then if I go about 2.5% higher, I'll buy another 30%. Go 4% higher, I'll buy the last 20%. I'm in this one because it's Christmas time. Bought the breakout. The earnings were phenomenal. They had a new game. They do the San Andreas game or get what I forgot what it ever is. It's one of these games, but it's a rather violent video game. But they came out with a new one that was also very popular. So it was something new. They're making a ton of money, and it was breaking out. Hawaiian Airlines, I missed this one. I looked at it, and you can see it right here. It's a breakout, and this thing just didn't look back. This has been an amazing stock, and it's still going, actually, which is very interesting. So it's still in my watch list, but instead, I don't want to get too much into any one sector, so I have Southwest, but it wasn't, let's say, same play in the field, but I believe in Southwest from many different ways, fundamental and technical. The other one that was interesting is Dycom. Dycom also broke out. You can see from here. Very profitable. And they supply Comcast and I think it's AT&T. And this thing has also moved up, even though we had this terrible day here on a lot of volume, which is pretty scary actually. But it reversed back up. It's very interesting. But I'm not in this share, but it's on my watch list. So this is what trend following is you combine a combination of fundamental and technical with rules. And basically, every week I post ideas. Last week I talked about Palo Alto. I'm in Palo Alto. Let me get to where I really want to get to. 1 second. I want to get to the products. I have the book, The Bible of Trend Following, The Bible of Compounding Money, both on Amazon. I do hourly consulting and mentoring, and I have a course. So if there's anything I can help you with, here's my email, Andrew at Trend Following Mentor. Just let me know. Thank you very much.